Hi, this is Kerry Artak with Wicked Stocks and Artak Advisory, bringing you really just sort of a brief update on a longer video that I put out a week ago on the U.S. dollar index, where I articulated, how it's comprised, that it's still used by institutions, banks, and trading firms. This is a chart going back, some 50 years. So we're not going to go that deep. But one of the points I did make is how, and this is a channel bottom that stems off the March '08 low. This is the financial crisis, the housing crisis low, the banking implosion low, and that we've been in this well-defined, what is this now? 17-year structure. We tested the top of it back in September 22. We provided this as a resistance area, if you recall, on YouTube at the time. This rising channel top is now at 117.71, and it has a sister formation, a channel bottom that is presently, and this is a monthly chart for the entire month of April, at 96.67. And in fact, when we tested the September 22 high, I also mentioned how it was contained by a long-term descending two-thirds speed line. In that video last week, I showed how to construct that and that it actually performed quite well in containing the 22 high and in the more recent January high. So we'll be following this speed line through time as a buy signal or as a resistance area to sell and a buy signal to buy upon settlement above. But at the time, last week, I was mentioning a channel structure on the monthly chart that we are presently testing and had yet to violate. And we put the video out, I think it was Monday of last week, a week ago, April 7th, I believe. And later in the week, the dollar continued to collapse, certainly violated this channel bottom. We are now expecting the 96 handle. And I'm really just sort of updating you on, and by the way, the US dollar index, this is the cash underlying index. It is tradable as a futures instrument on the ICE futures exchange. There are also some ETFs that are heavily correlated with that. I think you could actually, when the index is testing 96.67, you could actually just sort of keep one eye on it, and at that time buy the ETF. There's several ETFs that are correlated with the US dollar. So 96.67 is our objective. And in fact, I'm going to zoom in a little bit, and that same channel bottom that you see here at 101.27 for the entire month of April is for this week, that is Monday, April 14th, at 101.36. So this is a sellable resistance level, and just know that if you're following the dollar, holding below this maintains the sell signal into the 96 handle. Bear with me, I don't want to. And so 96 handle, what's in the 96 handle? Not only do we have a long-term 17-year channel bottom at 96.67, but we also have a descending channel bottom at 96.05. So there's a lot going on in the 96 handle, selling 101.36, taking profits at 96.05, or preceded by, of course, 96.67 all month long. I think we put it all together right here. And in fact, I've got 96.12 is the monthly chart, so keep that in mind. A monthly chart and weekly chart will often throw off slightly different levels, and because the spacing in terms of the timing is all a little bit different. But whatever you see this week at 96.05, and you might want to lower 96.12 to 96.05, that's your call. But really on the monthly chart, it's 96.12 to 96.67 that can contain selling. 17-year channel bottom. And this is a 3-year channel bottom. This is a big area. It's a big deal, and I'm expecting it. And it can contain selling on an annual basis, quite possibly through the rest of the decade. And from here, we can round up. This is almost a 2-decade channel bottom. And if we close below it, that would be a substantial sell signal for the US dollar. I don't want to go there yet. I'm not actually prepared to say exactly what my next objective would be, but it would be significant neutralizing of this longer-term uptrend in the dollar that we've witnessed since 2008. Until then, the long-term trend in the US dollar still remains bullish, believe it or not, above 96.12, 96.67. And if we can close the month back above 101.27, if we can close the week back above 101.36, that does neutralize the recent sell signal from last week and allow this market, to recover over the next few months back into the 110 handle, which is once again this long-term speed line. And Yeah, one long-term speed line that stems off the 1985 all-time high in the index itself. So I think that pretty much rounds it out. Just an update. I'm going to leave it at that. I think I'm going to be providing these on a weekly basis. And if I don't, you can certainly remind me on YouTube. And I just might use that as the impetus to update the charts and put out another video. Anyway, that's it. I'll be back next week with another dollar index update. You have a great week.